What is the anticipated capex requirement for the solar plants, and will these likely to be funded on or off balance sheet?
We are in the study phase, detailed design of the technical parameters required for the PV plant. We're going through an environmental process to get the EIA approvals over the next 6 months. We've quoted a 98 megawatt PV plant. We have the land available for that capacity. And at the moment, the costs are indicating about 1.6 billion rands capital spend. It'll be an off-balance sheet spend. We'll be going to market to get third-party funding, who will basically construct, operate the plant in future. So that process will be going to process fairly soon.
Follow-up question on the solar plant. Do you think you will use local or foreign providers for the solar plant, both for the construction and for the financing?
I know there's a lot of emphasis at the moment on local supply and manufacture, and we'll see how that plays out over the next 6 to 12 months. But I know a lot of emphasis from government to get local manufacture of certain goods. We'll monitor that as it goes. We will certainly have a lot of local content in the build, in the construction, local labour, as we do with all our projects to capacitate our communities around our operations. Yeah, it'll be an ongoing process, but I do believe a lot of key infrastructure, certainly inverters, potentially panels, will be offshore content. But yeah, we will maximise to the best of our ability for local content. I do believe funding will be local. We'll be going to local institutions to get the funding to construct, build and operate this PV plant. We continue to aspire to deliver on our commitment of more than mining through our responsible approach to natural environment, investing in our social and labour programs, applying good governance and sustainable business practices.
The feasibility study to generate 98 megawatts of renewable energy is well underway and will further buffer the region and our operations from load shedding into the future.
Our strategic discipline has been the main factor in building growth and maintaining the financial health of our business. Since taking over control and listing on the JSE in 2010, we have not only assumed responsibility for generating returns for our shareholders, but also to build a business that is sustainable and benefits all our stakeholders. As a result, the financial results show more than just the bottom line. They encompass the results of all activities that are aimed at benefiting all our stakeholders. 2022 has been characterized by a number of operational and economic challenges, including declining PGM prices as well as inflationary pressures. Despite these economic challenges, which had a significant impact on the industry, the 2022 results summary shows a resilient performance. There is no doubt that, like many in the industry, our business has been impacted by the current challenging market conditions as well as global economic uncertainty. Despite these economic challenges, our balance sheet remains robust, and our liquidity and funding positions remain strong. In line with the dividend policy, and given the uncertainty around the global economy as well as the corporate action, the board decided that it was prudent to declare an interim dividend of R2.45, equating to 711 million. This represents 35% of free cash flow before growth capital, and this distribution ensures that we return capital to our shareholders while maintaining a strong balance sheet.